Welcome to Thoughts on Investing. This week the markets got absolutely rocked, and it all came down to one single flashpoint. A conflict flared up in the Middle East, and boom, shockwaves went everywhere. We're talking about the price of gas, even your retirement account. So in this explainer, we're going to dig into exactly how this all went down and what it really means for all of us.
All right, before we jump in, the usual quick disclaimer. Everything we talk about here is just for informational purposes, okay? This is not financial advice. We're here to break down what's happening, not to tell you where to put your money. Okay, with that out of the way, let's get started.
So how can just one little shipping lane cause chaos for the entire world? It sounds kind of crazy, right? But the answer? Well, it really shows you just how fragile our global economy is. This week, one tiny stretch of water became the center of everyone's attention and anxiety. And that epicenter? It was the Strait of Hormuz. A conflict started heating up between the US-Israel coalition and Iran, and suddenly global trade just stopped. This wasn't some local squabble. Nope, it went global, fast.
Just look at this number, 20%. That's it. That's the key. 20% of the entire world's oil and gas squeezes through that one little choke point. So yeah, when something goes wrong there, you better believe the entire global energy market just freezes and holds its breath.
And the fallout was instant. Shipping companies slammed on the brakes, halting their routes. It created this huge traffic jam on the seas. And we're not just talking about oil tankers here. Think bigger. Container ships packed with electronics, car parts, even food, all stuck. At the end of the day, a mess like this means one thing. The stuff you buy every day could get a lot more expensive.
So, with all that chaos brewing, you can probably guess what happened next. The financial markets, well, they didn't just react, they kind of freaked out. The uncertainty sent investors running for the hills, and that first big shockwave slammed into stock exchanges all over the world.
And this chart right here, it paints a pretty clear picture of that fear. You see major indexes, like the Dow and the S&P 500, taking a nosedive. Why? Because investors were dumping anything they thought was risky. With a potential war brewing in a place that controls so much oil, that just creates a huge cloud of uncertainty over the whole economy. Meanwhile, with that strait all jammed up, the energy markets just went into total overdrive. Oil prices shot up, and pretty soon you had analysts on TV warning that we could see a $100 barrel of oil. And a spike like that, it hits everything, from what you and I pay at the gas station to the profits of massive companies.
So you gotta ask, right? If everyone's selling stocks, where's all that money going? Well, it's flowing into what we call safe haven assets. When things get chaotic, investors don't want risk, they want stability. So they sell their stocks and buy things like gold or the US dollar, stuff they expect to hold its value when everything else is going haywire.
But here's the thing. This crisis wasn't a case of a rising tide lifts all boats. Or sinks them, I guess. It didn't hit every part of the market the same way. Not at all. It actually created a pretty stark divide, with some very clear winners and some very clear losers. Okay, let's talk about the winners. And no big surprise here, they were pretty predictable. First up, energy stocks. With oil prices going through the roof, they soared. Then you have the defense companies. They rallied because, well, war is good for business. Investors bet governments would be spending more on military hardware. And get this, even some stock markets in the Gulf, like Saudi Arabia's, shot up. All thanks to the insane revenues their big energy companies were pulling in. Now for the flip side, the losers. And they got hit hard. The biggest, most obvious victim? The airlines. Their number one cost is jet fuel, and the price of that just went to the moon. And it wasn't just them. The whole travel and tourism industry took a beating. Who wants to book an international trip when there's so much instability in the air?
Okay, so we've talked about specific companies and sectors, but let's zoom out now, because the ripples from this thing spread across the entire global economy. This goes way beyond just the stock market. We're talking about a major macroeconomic event here.
And what it kicked off was this really dangerous chain reaction. First, oil prices spike. That immediately brought back all those old fears about inflation. Because think about it, higher fuel costs mean it's more expensive to make stuff and ship stuff. And that puts central banks in a really tough position. They were probably hoping to cut interest rates to boost the economy, but now they might have to put those plans on hold.
Another big thing we saw was in the currency markets. With all the uncertainty, investors from all over the world were looking for a safe place to park their cash. Where did they go? They piled into US assets. That made the US dollar get a lot stronger, which, in turn, made currencies in other parts of the world look weaker. It's a classic flight to safety.
Man, what a volatile week it was. The market was on an absolute roller coaster, swinging up and down with every single headline. It would drop on the first reports of war, then shoot up for a bit on some rumor about peace talks, and then pull back again when there was talk about sending in more troops. Just up and down all week long.
So let's just do a quick recap of the week. Basically, a war in the Middle East sent the markets into a tailspin. Oil prices and defense stocks went up. Airlines and a lot of other stocks went down. And the two big things everyone was worried about were inflation coming back and that big rush into the safety of the US dollar.
And all of this really leaves us with one big nagging question, doesn't it? With all these geopolitical tensions still bubbling under the surface, is this the new normal? Is this crazy headline-driven volatility something investors just have to get used to? I think that's a question that's going to be on a lot of people's minds for a while.
Hey, if you enjoyed the video and got something out of it, please don't forget to hit that like button and subscribe to the channel. We'd really appreciate it.